Today we were going to explain about accrued expense and deferred expense.
Hi everyone, my name is Tan Deng. My name is Nur Shazwana. My name is Natasha.
And my name is Ivy Chong Wei Ling.
Accrued expense are expenses that have been incurred but are not yet paid and recognized until the end of accounting period. Accrued expense are current liabilities.
Okay, the next one, we need to adjust the ledger entries. Reason for adjustment is expenses have been incurred but not yet paid in cash or recorded. So we need to debit expense and credit liabilities as both expense and liabilities are understated.
So let's move on to the example of accrued expense. In front of you of the table is showing accrued expense and the related expense account, which is accrued interest is also as known as interest payable, which is related to interest expense, accrued salary, salary expense, accrued utilities, utility expense, and the last one, accrued rental, is related to rental expense.
So the next one, how to record the adjusting entries of the journal entries is debit expense and credit accrued expense as known as expense payable.
Let's move on to question 1. And the account balance, salary expense 20,000, and move on to the additional information, which is highlighted the number 6, accrued salary 4,000.
There are 3 steps to solve this question. Is step 1, prepare adjusting journal entries. Step 2, prepare the statement of profit or loss. Step 3, prepare the statement of financial position. So the step 1 is prepare adjusting journal entries. Debit salary expense by 4,000 and credit accrued salary by 4,000.
This is the ledger that we want to show how to open the salary expense and accrued salary.
So the second step goes to statement of profit or loss for the year ended 31 December 2020. So we need to state our salary expense 24,000 under expenses, and we got our 24,000 by adding 4,000 from accrued salary.
Step 3. Prepare the statement of financial position as at 31 December 2020. Accrued salary is under current liability, which is 4,000.
Now I'm going to explain about deferred expenses. So what are deferred expenses? Deferred expenses are expenses that were paid in the current accounting period, but the goods or services will only be used in the following accounting period. Expenses are also known as prepaid expenses, which are categorized under the current assets. So the examples of deferred expenses are insurance, supplies, advertising, rent, and depreciation. Why we need to do the adjustment? We need to do the adjustment because the prepaid expenses are originally recorded in asset accounts have been used. So if we don't do the adjustment, the assets will be overstated and the expenses will be understated. So in order to increase the expenses and decrease the assets, in the adjusting entry, we need to debit the expenses and credit the assets account.
Okay, now let's move to the example and the related account of deferred expense. First, deferred insurance, the related account is insurance expense. Second, supplies, the related account is supply expense. Third, deferred advertising, the related account is advertising expense. And the last is deferred rental, the related account is rental expense. This is how we need to record the adjusting entry for deferred expense. We need to debit expense and credit prepaid expense.
So now we are going to take a look at question number 2. As you can see, we already highlighted prepaid insurance amounting 2,400 in the trial balance, and the additional information, number 4, insurance expense for the year was 1,800. So in order to prepare the full statement of financial position, we need to do a few steps. So the first step is we need to prepare adjusting entry. Second, prepare the adjusted trial balance. Third, prepare statement of profit or loss, and only then we can prepare the statement of financial position.
Okay, based on the question, first we need to prepare the adjusting entry. We need to debit the insurance expense 108,000 and credit prepaid insurance 108,000. Okay, from the journal we need to open the ledger. This is how the ledger is look like. We need to open the insurance expense account and prepaid insurance account. Then the balancing figure from insurance expense account, we need to put in the statement of profit or loss. And the balance BD for prepaid insurance 600, we need to put in the statement of financial position.
Okay, so the next step is we need to prepare adjusted trial balance. So, in this adjusted trial balance, we need to record prepaid insurance amounting 600 on the debit side. How do we get 600? We get 600 by deducting 2,400 with 1,800. Next, we need to record insurance expenses, which is 1,800. That was already stated in the additional information. So the third step is preparing the statement of profit or loss. In this statement, we need to record insurance expense amounting 1,800 on the credit side under the operating expenses. Remember, in this statement, we need to record the actual amount incurred. The last step is we need to prepare the statement of financial position. In this statement, we need to record prepaid insurance amounting 600 on the debit side under the current assets. So in conclusion, accrued expenditures and deferred expenses need cost to be recognized in financial statements. The only difference is in the timing of the recognitions. So that's all from our group. Thank you.